Good morning. Okay, so today is September 12th. No. Oh, wow. Yeah. September 12th, 2024. It is a Thursday. First thing I think about on Thursdays is turnaround Thursdays or reacceleration Thursday, right? Reaccelerating meaning a trend. Turnaround meaning is it going to be a complete, if the week is directional, right? Is today going to be the turnaround, right? So, hopefully y'all are doing good. If somebody in the chat can give me a thumbs up if my audio is working and everything is good, that'd be great. Morning, Jeremy PC. Thank you for being a consistent attender, and hopefully, like, you're getting some kind of value out of seeing me do a repeatable workflow process. The big announcement is that I will be releasing the vet to the public. Number one, like, I am not here to make money off of you guys, right? I'm here to give the thousands of hours of back testing and thousands of hours of watching live price to you guys because I truly honestly believe that, like, if I'm up here and you're down here, my job as a man is to reach down and get you to my level. And so that way we're at the even playing ground. And this is something that I learned about in the Army, being a leader in the Army. And then when you come up here, because whatever that separates me and you, for you being down here and me being up here, that might just be a temporary, wall so that before you can really shine. So my job is to reach down, grab you, and help pull you up so you can get above me. Because I might have plateaued out and I might need you to reach down and pull me up, right? The financial sector, is full of people who are dishonest, not transparent with their intent, and just have ethical issues and do not know how to make proper ethical decisions. And they also have a lot of reputational risk that shines bad light on their last names. And it shows that they don't take any value in their family legacy. I try to be the complete polar opposite of that. Not that I'm talking smack about anybody out there, but like, I definitely understand and I definitely value the way I treat other people. And that's why it's like I was transparent with why I even charge $8 a month, right? Somebody asked me if that's a marketing gig, to like give out a free tool. Oh, poor, pitiful me. Like, no, like absolutely not. Like I understand where that comment came from, and I totally get why they asked that. Because Wall Street is full of gimmicky car salesmen who are trying to sell you a lemon. But I was very transparent why I do this now and why I charge the $8 a month. And it's because I had over 35,000, 7,000 for my wife's car to be fixed, 15 for a brand new AC, 4,000 for dental. I mean, not dental, dog surgery, and then a hefty daughter bill. Right, so my savings got completely destroyed. Usually I would do this kind of stuff for free, but because I destroyed my savings account with all those bills and had to acquire credit, because believe it or not, like I'll be the first one to say I don't have this multi-million-dollar freaking account and I'm out here bare knuckle fist fighting these markets just like everybody else. I do have some Wall Street experience, but that doesn't give me no edge in these markets, right? What gives me edge in these markets is following a simple, repeatable workflow process and having a risk profile built behind that edge, specifically for that edge that I'm trying to incorporate. So that's the reason I'm doing it. I went on a long rant to say, like why I was releasing it. But to close it all, why do I charge the $8? It's because it's an additional source of revenue, right? So I can get a savings account back up and not have the deficit spend my my budget, right? And not breach my budget, right? Just like everybody, if you go through, I don't know how to do the not getting the alerts anymore that you live from YouTube. I don't know how to do that. But if you get to a time where you are trading out of necessities, and even like I got around 43,000 in unexpected bills, a little bit less, and like even if I wanted to, I don't think I could trade that high a volume out of necessity, right? Because that's not the size trader I am. Like I don't think I could like come in these markets and make 43,000 in a week or a month, right? A lot of people will sit here and say that they can, and I hope they can, but like I'll be the first one to tell you I'm not that guy. I'm lucky if I pull $1,500 a day out of the markets, right? No, I'm not lucky. Like I have a systematic system that does it. So that's the reason I do it, and I just try to be as transparent as possible. Because I think my job and why I'm doing this is because I want to instill hope. Because it can be frustrating just staring at these charts and banging your head against failure, failure, failure. And I want to instill responsible growth and realistic expectations, right? And realistic expectations, if you get hit with a life event, it's your job as a real trader to keep that away from your trading as much as you can possibly control, because it's kind of like in the army. And let's say a soldier, a good soldier, made a mistake. Based off of the consequence of that mistake as the leader that you give him, and based off of the recovery plan that you give him, would determine, does he recover from that mistake or does he snowball into a guy who makes a hell of a lot more problems and issues than you have time to deal with or he has time to, answer for. Same thing goes with trading. Once you get a life issue, right, it is your job to recover that life issue completely separate from your trading. And it's more important to trade the way you were before that life issue than to try to bring it into your trading, because I'll be the first one to tell you, like, you cannot, the moment you start thinking about things in your real life on these charts, the moment you're going to start trading out of necessity, you're going to break rules, you're going to over leverage, and you're going to be in a worse spot than if you didn't. So that's my spiel for today. Dakota is going to release that on Monday. It's not a gimmicky sales pitch, right? Like at the end of the day, right? Like if I have to DoorDash, if I have to go change oil in cars and brake pads out in cars, like I'll bring in additional income. If I have to go build porches for my neighbors, right? After work, like that's the kind of income I will bring in additional income in to make sure that I don't bleed, my life experiences over to these charts. And I think you guys all have experienced that, right? The last time I did this, and this is being transparent, was 4 years ago, right? Me and my wife, we saved up deployment money, we skipped vacations, we didn't go on dates to support my efforts on the charts, right? And within one day, I lost $33,000. I've made it back, but like one day, like after all this hard work of, being a good steward of my funds, being you know, like being smart with my finances, right? It took years to save up that amount to go trade. Um, It took one day to destroy that. And so like I had to go home and face my wife and be like, hey, remember all that hard work that we did? We skipped vacations, we skipped dates, we, like lived so I could save it, like so I could pursue this trading thing. Well, guess what? I lost it in a day, right? And no man, whether you are religious or what religion you follow or like what kind of man you are, like no man wants to like look at his sweetheart and tell them that, right? And so like ever since that day, right, I made a vow with myself never to allow personal feelings and emotions that come into my trading space because it's not allowed there, but to let numbers in a repeatable workflow process that I've mastered the performance on determine my way of trading. And guess what? Like, if I trade and make $8 a month or $8 a day, $300 a day, $1,500 a day, like if I lose $100 a day, like it doesn't matter. Like I don't care, right? Because at the end of the day, like I have built additional sources of income all around me to not have to rely on the markets, right? And that's what the ultimate goal is, right? Until I get so daggone good and my account is so big where I can actually trade proper size with proper, you know, performance intent, right? I'm at this skill level of a trader, like, and I'm trading my position this low. I need to align my position with my performance, right? But like, however long it takes to get to balance those two out, right? Like, I'll take it because I don't put expectations on my trading P&L. Even though that's one of the most important measurements you can have as a trader is your expectancy ratio, right? It's probably one of the worst things to do. It's kind of contradicting because like the moment you like put an expectancy ratio in your mind of how much that system should be making is the moment you're going to screw it, or the moment Matthew Mickey, will screw it all up and think more about that P&L than mastering the performance and the steps that I'm supposed to go through. All right, so that was a long rant um, for one announcement. Welcome. And like that's now it's time to do our workflow process. So up until yesterday, right, for over the last month, right, we've been outside of our higher time frame. Like we were stuck between this previous month 50% and this NFP Friday high, right? We were just in this horrible range, and yes, we are in this horrible range still. However, the conditions have changed for how I identify, a trend market versus a non-trend market, right? So this is previous month 50% where this red line is. This is this month's NFP. And yesterday we closed hecka bullish, right? On a Thursday. So I'm expecting acceleration Thursday. Why? Think of it like if you go to the 5-9 charts, right? Let's go to 10 o'clock because that's the one I'm testing right now. Actually, this one's a good, no. And this is me cherry picking. Let me turn some of this off because I've noticed this and I want to bring it up anyway, right? So if we look at the relationship, this is the 9 o'clock hour and this is the 10 o'clock hour, right? 9 o'clock hour, 10 o'clock hour. And what you will notice, and I'm still gathering the numbers, so take this with a grain of salt, right? Is that this 10 o'clock is opening at the bottom portion of this previous hour range. And when the 5-9 box develops, it just accelerates, right? It doesn't care about any of the 5-9 box besides this one retest right here where it steps below and retests the close of the 5-9. It doesn't care about anything in the previous hour, right? It just goes, right? Now, going back to our original chart, right, we can see that this is just a heck of a pop. This is acceleration, right? Because it's out of this. Let's go to another example. Let's go to the last November when we started the trend out of the summer seasonality slowdown. This was the summer seasonality slowdown. This was July, August, September, October, and then right here we get acceleration, right? And so it was on this day, and I want you to pay attention to the acceleration of these days, right? Number one, you can see that the open of this day made the low of the day. The open of this day made the low of the day. These are acceleration, right? And what did we do? We accelerated past previous month 50% and NFP Friday's range, right? So when you see that one day is accelerating like we did yesterday, like your mindset needs to shift into we might not have any retracement back into this day's range, and we might accelerate, right? And that's how your mindset has to be. Because we are above previous month 50% in NFP Fridays, we have to follow our rules. We have to expect that this is the start of a bullish trend for the month and that we will end the month higher than the open of the month, meaning up in here somewhere, right? Because that's what our rule set says, right? So that's where we are on this part of the trend. And if anybody ever wants to jump up here, I'll send you a link and like start working, going through the process and mastering and all that. I'll go up. I don't mind doing that. Okay, let's put this on the weekly chart. And remember, we're here to measure the fixed constant variable of this 5 EMA. This 5 EMA is just giving us a constant to measure how far below, how far above we get for a pricing standpoint. And so far, we saw that this week, right, we went 4.29%. Remember, I said we looked between 2.5 and 5% on the weekly chart away from that 5 EMA to expect a repricing, right? Meaning that when we're between the 2.5 and the 5% of that 5 EMA, we've overpriced whatever economic news, whatever earnings cycle, like it doesn't matter what we're pricing in, we've overpriced. And they expect a slowdown and then a continuation of the trend or a reversal of that trend. And right now, we're seeing a reversal of that trend, right? Because now we're above the 5 EMA. We haven't taken out previous week's highs or lows. We're above the previous week 50%. We're above previous month 50% in NFP Friday. So we can anticipate coming up here to take out this week's high, previous week's high, and close the month higher, right? We have to get our mindset in that, right? And because of being above previous month 50% and NFP Friday's range, what does that tell us? That we're looking for the low of the day in the morning for us to close the day higher, right? So now that we're on this chart, we might as well. There's a damn fly in my room. It's pissing me off. Right? Let's go to Tuesday's range and put it on our chart. So Tuesday is right here from the 9:30 to 10:30 range. Because just like, and then let's do the Sunday. This is Sundays, and I use the 18 to 1900. So that's right there. So from this standpoint, from Tuesday to Tuesday, saying Tuesday is the start of the week, next Tuesday is the end of the week, right? And even Sunday, right? These are just fixed constant measurement tools to tell us for the weekly chart, right? As we opened, we went lower, we swipe back through, and we can expect the high and then the close for the weekly chart. That's all we're doing with this Tuesday or this Sunday, right? Whichever one's the most obvious, right? With this far away from Sunday, do we expect by tomorrow coming all the way back down? No, we don't. That's unrealistic thinking, right? But what is this story telling us for this Tuesday's range? We went opened, we went below it, now we're above it, so we can expect on the weekly chart we're disputing higher and Friday to put the close price in. Okay, so hopefully that has helped you. So let's move to the next step. Let's go to the hourly chart. And this was what the projected weekly profile was based off of. It erased. No. And wait a minute. Maybe it's on here. Oh my gosh. It erased all my drawings. Well, anyway, shit. This was the high of the week zone right in this area for the week, right? And we were expecting that Tuesday would put the high of the week in, right? And then for us to come down and distribute lower. Well, yesterday we blew right through that. So we had to not be all boo-boo lip because we were not right about the high of the week and the direction of the week. We have to take that clue and let the market tell you that you're wrong, accept it, now trade with. This is the market punching you. And when somebody punches you, they're exposed and vulnerable somewhere because the effort that they put into the punch, right, is telling you where they're exposed at. So if I punch you with this arm, what part of my body, as I'm the person on this side getting punched in the face, right? Am I worried about getting punched in the face, or am I worried about this whole side of their body and this whole side of their face being exposed? That's a real question. Like, I'm such a violent dude. Everything I refer to in the markets has to do with the army or fighting. I'm really a peaceful guy. But like as the market's punching me, it's telling me it's exposed right here and it's exposed right here. So this is the market punching me. But what is this telling me? It's telling me that, yeah, you're wrong, but guess what? We're going higher. So now I am more confident because these measurements were based off of very, very multiple sources of statistics. So, and the higher time frame, right? So I'm wrong. Cool. Now I know where the market is vulnerable and exposed, that the market showed its hand to me. So at the very minimum, the next 2 days, I should have a good grasp on reality that the high of the week or the low of the week happened on Sunday night, and we have a contract rollover. And this is the small little details I want you guys to focus on. If we're in a contract roll week like we are this week, and we leave, let me turn off this so it's clear, and we're willing to leave, whether it's a regular trading gap, whether it's a new week opening gap, anytime there's a gap on your chart, which is a volume imbalance, which means that price didn't respect this, and there might be orders or might not. Like, I'm not here to talk about where orders are placed. Anytime that you notice an inefficiency in price, whether it's this, whether it's this, which the ICT community calls this BISI, right? Whether it's anytime you see that and price is failing to go back, whether it's auction theory people use fingerprints, anytime that you notice that discrepancy, especially on a contract roll week. So like if we go to this month's contract, NQ, what should be U, HASMA, yeah, U, right? And we notice discrepancies in price like that, and the market is just bluntly ignoring them. Right, so let's go back over here. Does it exist? It does exist, right? That's telling you a huge clue, right? That the market is so daggone strong. This is a sign of strength. This being unfilled properly is a sign of strength, right? And one that I missed. That's a clue that I missed, which is fine. I didn't miss it. I thought we were going to be returning back to it because it's a contract roll week. But does that make sense so far? Because I feel like I've been rambling and I have the ability to go way too in detail and confuse everybody. So hopefully that made sense. All right, so now let's move on to what we're here to do. Put the highest probable trade on the chart. Yeah, I don't know what's going on with the alerts, Danny. Like, I don't even know how to set up alerts for my own people that I watch. So I'm probably not the best person to do that. But all right, so we went through our higher time frame. We went through all that. So now it's time to put today's probabilities on it, right? Starting with settlement 1615 from 8 to 17. We're going to put that line on. Same thing with these time-based these time-based probabilities, right? This is settlement. We know that settlement is the previous day's close. We know that we have a 66% probability of returning to it. If we fail to do that, that's telling us that the market is so directional that it's strong, right? So that's that. Now we're going to put on midnight or week in the other scenario. Okay, so we're below the midnight right now. All right, now we're going to put it on our 1800, our Globex open. Oh, it's right here. So this is our time-based probabilities: midnight, settlement, Globex open. Now we are going to put our structure-based probabilities on. Which you, as the user, once you have access to the vet, you can take this 15-minute high and this low right here, right? And you can use the midnight snap or you can use the vet, whichever one you want, and you can find the probabilities using that. I already have them built into my system, so we're going to use the 2000. Ah, don't clone it. Damn it. Structure 1. Structure 2. And this is down here, actually. This is the low. So from 1800 to 06, whatever the high and whatever the low is, we're going to put our time-based probabilities on here. So this has an 82% probability of being returned to. This 2 o'clock has an 84% probability of being returned to you. All right. And look at that. We're opening up a new 12-hour near the midpoint. Crazy. All right. So now we're going to use whichever way you want to define Asia, however you define London, because I know the ICT community and the DR community and the auction theory community, they all define it from different time frames. Whichever way you define it is up to you. I use DR, right? So from 1930 to 2030, that's the Asia range. From 03 to 04, that's the London range. And what price does outside of that range until 02 tells me what Asia did. Whatever price does between 04 and 8:30 tells me what London did. Right? So then I go over to my database, which we'll build in an indicator that will do this for you. And so we see that Asia went long and never came back and violated the other side of this range. So this would be a true long. And we see that London has gone short, but it hasn't completely shown its hand, right? And we're going to enter those probabilities into our database. Ooh, is that low volume node that we're approaching, Jerry, that we talked about last night on CL? I need to start doing this for crude oil. Crude oil is at a juicy spot right now. Okay, starting with 4,200 days. Nice. Waiting for my system. So starting with 4,230 days, we're going to say, yeah, I saw that. We're going to say, it's amazing. That was a good trade, dude. The Asia went long. True. We never breached that midpoint. And remember, you can do that ICT Concepts one setup for life indicator, and then you can customize whichever range that you want to do. What are you talking about, Danny? No, we're not talking about going long, right? We're saying that Asia, in its range from 1930 to 2030, right? This is the range that we've defined and we've collected data on. We're saying that it stayed above it and it didn't reach the other side of that range, right? Just like from 3 to 4, right? This is the range of 3 to 4. We went below it, but now we're trying to see where price is going in relationship, because based off of what these two time periods do, we'll be able to use probabilities to tell us what the likelihood of 9:30 to 10:30 will do and what we'll do after 10:30 from a probability standpoint. Okay. Oh, I didn't realize. Yeah, we're still plotting our probabilities. It's just we are using what, like, so we've done our time-based probabilities, we've done our structure-based probabilities. That incorporates where those, like this midnight is a static probability. This structure-based is not a static probability. This is a variable that can change based off of this 12-hour period where the high and the low is, right? Now we're doing our projection-based probabilities, right, using Asia, but we're using what the Globex session has done so far, right, to determine what those probabilities that we're projecting are going to be. Because this is all clues that if we collect data for, right? Like, will tell us what the highest probable 9:30 to 10:30 where it will be, right? And then what the highest probable 10:30 to 16:15 the direction that it will be. All right. So, just based off of this Asia structure from 1930 to 2030, right? And that we went long, put in that variable till 02 that we went higher and stayed outside of this range and then breached the other side of this range. We took 4,280 days and now we have 1,606 days left. Now, putting in what London has done from 3 to 4, right? We went below it and we did not breach this side, telling us that there's more likelihood of us hitting this low and then going to this high, right? So let's put that variable in. So it went short. And right now we're not going to put true, false, or anything in because live price told us that Asia was strong, so strong that we couldn't breach the midline and we couldn't breach the other side of it. And we're going to put that London went short, but it's not like, so we're just going to put that variable in because that's what live price has told us. So we have 718 out of 4,280 days. These signatures has happened over 718 days. This has happened so far with the variables that we have on the screen from the Globex session. Now we're going to put our projections on, which is this projection right here. Nope, I haven't saved one yet. So let's make this blue. Let's put text. So 19,359. Out of those 718 days, this 19,359 was hit 74% of the time, right? Out of 718 days, this 19,446 was hit 46% of the time. Five five two was hit 27% of the times. And you guys can do this with a vet once it's released. So that this 19,201 out of 718 days has been hit 78% of the time. This 19,149 has been hit 62% of the times. $19,061 has been hit 44% of the times. And because London is currently shown as hand, right, we can't, there's two possible scenarios for this to play out, and we're about to go over that after I put in these probabilities. 18,957 has been hit 30% of the times. All right. So now the two possible scenarios that can play out is that we can continue lower, right? Or we can, this 3 to 4 o'clock range, we went below it, and we're going to violate it by going to the other side of the range. If we decide, so scenario one, is that London continues to the downside until the open. And this is the probabilities that we just put on our projection-based probabilities. Scenario two is that London reverses the direction, reverses down and violates the 3 to 4 range before the open. Ooh, a lot of spelling errors. Right, which has a whole separate probabilities, right? So first and foremost, let's define a London underline, right? That will give us a clue of that. All right, and that's the midpoint of this 3 to 4 o'clock range. All right. The fact that we're below this indicates that it's an alert, and then we're putting in our Asia OU line. It's an alert that we are going with scenario one right now, that we'll continue to the downside. The confirmation of this alert of scenario one will be once we breach the Asia midline, right? And then we should be targeting these lower probabilities based off of our range. So let's put the variables in for scenario two, that London reverses the direction because London has been short, and we reversed and we breached this high from the 3 to 4, and we continue to the upside. That's scenario two. What are those probabilities, right? So right now, based off of what Asia has done and cannot change, and what London has done so far and cannot change, we're going to inject a variable, right? So we're going to say that scenario two, we will breach this high and go with scenario two. And what does the probabilities of our levels and what does our New York look like? Right now, the highest probable 9:30 to 10:30 looks like this. This is scenario one. If we stick with scenario one, the highest probable is 32 plus 10, so 42, 42 plus 9, 51% probability that we will be below, the 9:30 to 10:30 will be below this London range, right? And then there's a 52% probability after 10:30 that we go up, right? And that's using DR statistics, right? Now, if we go with scenario 2, that London reverses to the direction down and violates the 3 to 4 o'clock range high before the open. Now, let's do that. Now we're down to, if we do that scenario out of 4,240 80 days, right? Based off of what London and Asia has done, now we have 176 days that have done that variable for scenario 2. And out of that 176 days, the highest probability of New York 9:30 to 10:30 range is engulfs that 3 to 4 o'clock range to both sides, and then we at 10:30 go higher, right? And that is a 52% probability. All right, so that says that we can expect the probabilities of our structure, if the scenario plays out, structure stat 1, Globex stat, settlement stat, these all to be fulfilled during the 9:30 to 10:30, right? And then for us ultimately to come down here, do an inventory correction, and then close the day higher. Does that make sense? All right. So now removing that off the chart because it hasn't happened. That's just scenario 2, right? Erasing the 3 to 4. This total soap, like I do this process every single day the same way, right? So like if you want to collect data on it, you have to watch the videos and you have to take notes because I specifically tell you what data I look for. And I'm not going to stop my workflow process to answer that because I do it every single day. Okay, so now we know that the highest probable 9:30 to 10:30 is going to be below this 3 to 4 o'clock range, right? So now we need to put our average 9:30 to 10:30 range over the last 10 days is 185. So we know that the highest probable direction or location of the 9:30 to 10:30 is below the 3 to 4, and we know that over the last 10 days, on average, the 9:30 to 10:30 was 185 handles, right? This is what our expectations can be for the 9:30 to 10:30, right? Between now and the open, let's say we go with scenario 2 where we breach, right? Remember scenario 1 is we continue to the downside away from the London 3 to 4 o'clock, right? Scenario 2 is we say, screw that, we're going to go higher, right? This scenario would look like this. But because that hasn't happened yet, we have to project for scenario 1. And so we're going to anchor it off of this midnight price, right? So we're saying that 9:30 and 10:30 range will find some kind of statistic or some kind of resistance around this midnight price because we know that midnight has a 75% chance of from 8 o'clock to 12 o'clock of retracing to that. So scenario 1 already says that we're going to go away from this 3 to 4 o'clock range and that we're going to say that midnight, that 75% probability between 8 and 12, that the 9:30 to 10:30 will be within that area. All right. So now we're going to do our average daily ranges, right? So turning on the VET, we can see that our average daily range over the last 10 days is 468. So we're going to draw that out, 468. and we've only moved 24% so far of this average range. That's 468. But if we already know that both scenarios have us closing higher for the day, right? If both scenarios have us closing higher for the day, this is how much range we have to work with, right? And this one I'm going to do up here so you guys can see how I do this. So if this is our average 10-day range, and from 4 to 8 on a Thursday moves 32% over the last 30 Thursdays, this is how much our 4 to 8 moves. From 8 to 12, it moves 1.03. And we know that the PM session moves 0.84. And that we've already moved 24%, which will cover this gap right here, right? So now our job is to take the probabilities based off of what Asia and London has done and synchronize these on the charts with the, well, first and foremost, synchronize this with the highest range. So we know, let's turn this off. We know that we have two possible scenarios that can play out, and right now scenario 1 is playing out. So we're going to lock this on a probability, right? And that probability is going to be this 44%, right? To the downside. Now we're going to come take this 30% that represents the 4 to 8 o'clock range. I'm going to plant that because we've already hit that time period, which 4 started right here. And we've already met the criteria of the 4 to 8. So this is a 4 low, and it's not even 8 o'clock, and we've already met that average range percentage. So now, this is the 8 to 12 percentage that we're going to plant. And if we know that this is the range, this is the most likely outcome of the 9:30 to 10:30, which falls in between that 8 to 10 o'clock range, right? And we know that if we stick with scenario 1 where we continue to the downside, then this gives us more consistency, because right now we know that this is what the 9:30 to 10:30 range is going to be, right? Somewhere in this, right? And then in that after 10:30, we said that there's a high likelihood, the higher probability is that we go up, right? And we have a close higher than the open, right? So now we're going to incorporate what that would look like with this. Now we have an issue, right? If this is to play out this way, right, now we have this much of the average daily range unaccounted for. right? Which can be the case, right? But maybe we don't make it to this 44%. Maybe we make it to this. This 930 to 1030 still stays within below that London. If it's up here, this 8 to 12 range stays like this, and then the 12 to 16, or the 1030 to, or the 12 to 16 looks like this, right? And that would be, you still have the excess of this average daily range that's unaccounted for based off the distributions, the average distributions. Or, right, remember that range X, or when we engulf, right? So right now, what we're looking at for scenario 1, I know I'm going to lose a lot of you guys, that London continues to the downside until the open of 930. With that, we know that below London has 32, 42, 51% of happening, but to engulf London has a 25% probability to be above London currently. 7, 6, 13, 13, 11, so 24. As that, right? So as we're planning our range pieces, our distribution pieces, right? There's a possibility of us rejecting this 78% right here, which would look like that. And then that would be synchronized to that. And that would be pushing us up into here, right? Hopefully this makes sense. I'm pretty sure it doesn't to a lot of you guys, and that's okay because we do the same thing every single day. So if it doesn't make sense today, continue showing up until you understand it. But with that being said, I do have to jump. Hopefully you guys got something that made your time valuable, because that's the intent, to give you a good outlook of the day. Either way we go, whatever happens between now and the open, right? We know that after 1030, right, there's a higher probability of us closing higher than closing lower. All right, let's do a quick after action review. Up into what part of the process do you guys usually get to have before you start getting confused? Jeremy PC says it all makes sense. If I confused anybody, especially with the scenario 1 versus scenario 2, like, is this the area that you guys get confused at? Got it. Thanks. Okay. Thanks, Cap. Hey, man, like, you have a busy couple of days because M7 and ICT are battling on Twitter, Precious. And so, even though neither one of them are competing in the Robbins Cup, they're out there, like, fighting with each other. So it seems like your Q4 and the rest of the year will be busy for you, Precious, to see, because it sounds like they might actually start competing in the Robbins Cup. Who knows? But like, I look forward. Like, if you guys don't follow him, Precious Inforlia, right, is on Twitter, and all year long he's done an outstanding job being the official scorekeeper on Twitter of the Robbins Cup. Whether it's the futures category, the forex, he's done a really outstanding job on, tracking the competitors and where they're at and what they're saying and how they're performing, and it's just non-biased. Like, he has a non-biased Twitter that tracks it all. And he does such a outstanding job at it. And like it's just a great Twitter to follow. It's like watching like a broadcaster, broadcast the Super Bowl. I don't put my money on anybody. I put my money on whoever's actually, like performing and leading. Like I would like either ICT or M7 to win it because they have such a large community of followers and people who study under them. I would like to see one of them actually win it. Um, just to give the students supports that their theories can work. But a competition doesn't mean that you can't be profitable with the material, right? My workflow system that you see me do every single day has parts of ICT, parts of DR all up in it, right? But it's my own thing that I've tested, right? And at the end of the day, for you, the trader, who gives two shits? Who gives two shits how ICT trades his accounts and what is in his account? And who gives two shits what's in M7's account? Because at the end of the day, that doesn't make you money, right? You mastering one kick over all market condition, that's what makes you money, right? Like your risk profile built behind the edge of what you trade is what makes you money. We're not here to be cheerleaders. We're not here to be Colts. We're not here to, do any of that nonsense, right? This isn't sports, right? Like this is your personal finances that you worked really hard for, that you are trying to be a responsible steward of, and your job is to build realistic expectations around that. The educational phase is the least important phase in the trader's journey that will get you to the compounding phase, right? Because at the end of the day, you have the educational phase, what the guru teaches you, then you have the testing phase. Is the guru legit in his teachings? You have to back test and get intimate to find, is that edge or is that not edge that can be sustained through the years of trading in markets, right? And then you have the risk profile phase. Now that I found edge that I learned from guru, right? What is the risk profile, the most ideal risk profile around that edge? And you build that, and then you have the compounding phase. My job is to follow the rules, as no matter what influences my thought process, is to follow the rules of the back testing phase and the risk profile phase. And that way, through time, my equity curve can go up and to the right. That's what it's really all about, guys. And being able to sustain a scalable system that lasts throughout time, right? That's what trading is about. It's not about these competitions. It's not about anything of such, right? Obviously, educators in the space, they have a task and purpose, and that task and purpose is to open the whale's mouth and to engulf as much advertisement as possible to get students so they can educate, right? Don't focus on the shiny objects and don't focus on the noise. You view it as it's supposed to be. It's entertainment. That's how it should be viewed. Entertainment, right? But at the end of the day, trading is not a religion. You worship one person, and that guy is not in physical being as of right now, right? Trading is not a religion. Trading, like, there's more important things. Like I tell you guys all the time, in 40 years, we will all be on our deathbed or dead. Do we really want to, on our deathbed, look back and say, I spent most of my time behind these charts or worshiping this individual when I should have been living life a little bit better and enjoying the people that really matter in my life, like my family, my close friends, et cetera, right? So don't get trapped into this trading space where you think you have to sit behind these charts for 12 hours a day. What you need to be obsessed with is getting your trade into the compounding phase where you do it the least amount of time that it can be done so you can go live your life. Because in 40 years, you guys, most of you guys are above 40 years old, right? You know how fast it flies, right? Don't waste your life on this nonsense. All right, but with that being said,